Hello, this is Solomon Davis with Right Side Trading, where you can learn to trade on the right side with confidence. Today is 17th, and this is my weekly trade review, where I review a NASDAQ trade, a NASDAQ 930 open trade, where we look at a 5-minute candle. If that candle is green, we trade up. If that candle is red, we trade down. We look to make 5 points or more on a NASDAQ contract, or we take a loss of 5 points or less. Okay, this is all for educational purposes only. Disclaimer is not here anymore, but I should bring it up to let you just know you can and will lose money at trading. Trading is risky. So seek advice from your financial advisor, from your significant other. See if trading is something suitable for you. This is our new website here. Click around, see what's there. Check it out. Like I say, this is my weekly trade review, May 28th, 2017, for the week of May 22nd through May 26th. Visit us at rightsideTrading.com. Email us at info@rightsideTrading.com. Email me directly at solomon@rightsideTrading.com. Call me directly at 727-69-QQQ-09 or 69-77709. Jump right into it. Okay, this past week, on May 22nd, it was up. I say greater than 10 up. Usually, based on some of the rules that we have, if you see my rule video, we usually say no trade on that with this NASDAQ opening trade. But a lot of times, that's a good time to start that swing trade. Again, a lot of times it doesn't pull back, or if it does pull back, based on the direction that it's going, based on where it's at in the market, a strong move like that gives you usually indication of what's happening or what's going to go on in the market. And you can initiate a swing trade, which I did for the week. Then on the 23rd, down for 10 or more. May 24th was down for 10. I said we'll take a look at that and say it's all based on your entry if you got 10 on that trade or not. Then on May 25th, it was down and stopped. May 26th, also down and stopped. Let's see if we can take a look at the charts. See exactly what I'm talking about. All right, the charts are up. Let's just take a quick look at your, I don't really get a big overview of the market thing, but the market here, this is the NASDAQ. It's just been going the past few weeks. Bounced down here, we had a big pullback, a couple of weeks ago. And ever since then, we broke that high and been going higher. 1, 2, 3, 4, 5. This was that big day where I say, okay, let's start that swing trade. If you wasn't already in back here, I actually got in back here on this day. If you saw my last, as you see in my videos, of last week, I said one of my friends, he was looking for something to sell. I was looking for something to buy. At that time, I actually did a long Q trade initiated a long Q trade at that time, and a couple other things at that time and all. And I got out. Everybody who knows me, I got out as soon as we cleared this top here, out of my Q trade. And my other trade, closed that trade too. I did actually close that trade too. I have one other long trade that is actually still on in this market. And that's just again, I do day trade, but I do other swing trades and other trades also. There's other things that when you see it in the market happening like this, you have to. This is your lowest risk point right here at this bottom. If it breaks that bottom, yes, it's going down. But if it never comes back to that bottom, all you're doing is making money all the way through to the top. All right, that's enough of that. Let's get down to our 5-minute trade and see what was happening during the week. Okay, 1, 2, 3. Let's scroll back a little bit. 4 and 5. That big day right here. Let's look at this like that. Again, on this was Monday, and this was a greater than 10 candle. What I usually look at on one of the rules is if that candle is greater than 10 points from low to high. We on that morning trade, that 5-minute trade, we'll pass on this. But again, if you was looking at the pivots and everything and how this thing had been moving nothing had broke above this point. A lot of times that, yes, that is a scary trade. And in the future market, you'll be in this trade maybe as soon as it had broke this high and broke this level and all, and then this has just been all bonus for you. But planning it off the 5-minute trade, we don't take this trade. We pass on this trade because getting in this trade and expecting to go even higher above a R3 level, and getting your 10 points is usually pretty tough. Let's get back to it. I hate the way this chart thing does this. That's it right there. And if we look at this, yeah, if you would have got in, make sure we're on the right date. This is the 22nd. If you would have got into this, say at any point after this, say you didn't get in until you got in kind of late at 56.80. 56.80, it did go all the way to 56.90. But it took you all, you've been in this trade all day in order to get that money. To 12 o'clock for me, that's all day. I'm done trading I have to be out of here by 11. So that was that day. And that's why I'm trying to explain why we end up passing on a straight trade. For me, for day trade, it's a long trade. That's why, again, I also say swing trade it. You get into it with some options, or if your account large enough to hold some future contracts over the weekend, you do it that way. Because, again, a lot of times there's strong moves in the direction that they're moving sometimes. Let's go to the next day. Again, this is red. This was down for 10. Real easy trade. This is another one. Again, it was trending up, but that first candle was red down. Again, this is just a trade that just works a lot of times. And you were able to get into this trade wherever you got into it on the downside and made 10 points or more, no problem. And this is what you usually expect when you get an R3 level above. Give us confidence in taking that trade on the downside. Next day. Boom, again, another red day. And this was down, and this is the one that was down for 10. Again, we were up at our R2 level, and we got a red candle. Again, giving us confidence to take that trade to the downside. But again, if you would have got into this trade somewhere in this upper area, you never really got close to a stop. But it's all according where you got in at, if you got that 10 points or more. 08, I remember down here at 08 is where it came down to. If you had got a good entry, you might have got in around 18. That's why I said 8, and from 18 to 8, 10, and I left it at 10. Because a lot of times, if you're actually trading this, you don't nail it right here. You might slip a point or two and get into these trades. So that's why I said 10 on that particular day. Back here on this day, you got stopped out. Let's take a closer look at this. Again, we were above. I don't know if these pivot lines are right. I'm looking at my live account or I'm looking at the virtual account. Yeah, I'm looking at the virtual account. Again, I don't know if the pivot lines are right here in the virtual account. I'm going to create my own pivot lines so I know they are right. Because I don't know if we were bubbled that far above the market and all. Again, bouncing here off of this upper pivot and then going higher. That was a good trade. I actually traded that with options this day, I remember. And I don't remember pivots being like this. I don't know if they were or not. But again, I'm looking at my pullbacks and my drop and rallies. So I traded that one with options. Did okay. Down, if you traded it down though, getting in here at 45, it didn't go nowhere near 35, which would have been down here, so you ended up getting stopped on that day. Let's go to Friday. Friday also, let me go back here. Let me get this back to auto, where you can actually see what was happening. Friday, again, that market was going up. It was right at pivot, and it ended up going down. You might have wanted to play this down, even if you got into this trade. Again, this is one of those trades where it never really developed. I didn't even say you didn't get close to 5 points from this trade. Got stopped out of this trade and then out of this trade as soon as it came back up here and started breaking these levels here, especially when it closed above that. So that was a small loss, or definitely you got stopped out on that trade. So that was pretty much it on NQ. Another little thing I'm going to share with you guys here today. I always talk about you should plan your trade. This is going to be really quick. Let me see if I can get to switch screens. Do it. See if I can do this. Select, apply change. I'm gonna maximize this. This is one of the things that I do when I'm trading. The thing is to plan your trade, plan what you want to do. Again, here I've been talking about trades and planning a trade. Now, when it comes to the money amount, you need to also plan, okay, whatever, how you want to do it. Me, I kind of look at it per trade. I put a $3,000 number in here, kind of like to let you know that's what you usually, the minimum, a lot of times to open an account, a margin account, they want you to have anywhere from $2,000 to $3,000, especially if you're trading options. If you've been hearing, I'm trading, back trading my Qs. So this is how I have to set myself up to trade my Qs. I like to know, okay, how much do I plan to make on a given trade? I say 10 contracts, 10 cents. People say, well, 10 contracts, 10 cents, that's $100. No, but commissions going to knock you down, anywhere from $10 to $20, based on where you're trading at. It can be less than that at some places and all, but that's the whole thing. So I take that in consideration, how much that's going to, and I say, okay, and that's how much my account is going to go up. That's how much I actually gain. That's how many contracts I have to have in place in order to make the money that I want to make. And I plan it all the way out, for the next few trades and all. And then even after that, doing that, it kind of gives me an idea where I'm at, where I'm going. When I see these like only $75 or only $150 or something, for the day or for the week, whatever how you are looking at this, it's not it's not you've met your you're not setting your expectations too high, and that's what a lot of people do and get discouraged. Then the other thing that I actually do, okay, based on what I've actually done, say by the end of last week, I say I made $75, but that was 2%. That was 2% profit, and total for the year, total whatever profit, that's 2% profit. A lot of people they're happy to make that in a full year. Sometimes on that account, much larger accounts though. And then say then the following week I make a little bit more. My account starting amount and then my current amount is what I usually look at. Okay, then I see where I'm at now. Okay, I made 4% that week. I usually I do weekly trade reviews. I do weekly reviews of my account and where I'm at. So I made 4% that week. Now for the year or for where I'm at based on that account starting amount, I'm up 6%. And I go on and on like that. So it doesn't take. If you trade this stuff, and a small account is easy to work for me. Definitely for me, it's easy to work with until I get to a certain amount. Because again, going back to this sheet, I can trade up to me comfortably 100 accounts. 100 contracts, a couple hundred contracts, and that's going to get me, close to maybe even over that $100,000 that I like to make in a year trading. And we have done this. A friend of mine's, well, I'll use a name here, Richard, great trader. I've seen him run $3,000, $2,000 accounts to over $70,000, $80,000. So this can be done. We have done this, and I'm getting back where I wish I had him trading with me again, but he's not there. I have to do it myself, so I got to get myself focused. But that's all I really want to share with you. This is one of the things you need to plan everything when it comes to your trading. Also look at the money. Know what you expect. Have your expectations set properly. Don't overdo it. Again, this is Solomon from Right Side Trading, where you can learn to trade on the right side with confidence. Talk to you later. Bye.